What is up, guys? Welcome back to the channel. It's Dave and I'm here to help you win with money and build your wealth. The stock market has stood the test of time, proving itself as one of the best ways to build wealth. The S&P 500 has returned on average 11.88% since it was started back in the year 1957. That means that if you had invested just $1,000 into the S&P 500 back then, that money would be worth $1.46 million today. So while the stock market has a proven ability to return money and help you build wealth, there are some common pitfalls that you definitely have to avoid, or else you will lose money investing in the stock market, and we don't want you to do that. So today, let's dive into 5 things that will absolutely cause you to lose money in the stock market in the coming year. Never do these 5 things with your money. So you're going to want to stick around till tip 5, because that's the best one that I have that causes the most amount of people to lose money. Number 1, never panic sell your investments.
But Dave, the stock market's losing money. It's down 30%. I can't take it.
See it all the time. Stock market's going down. We're in a recession. The world's on fire. But the truth is, the world is not on fire. The stock market's been around for 65 years, and like we said earlier, it's returned on average 11.88%. It is very proven, it is very strong, and you don't lose money until you lock in a sale or you lock in a buy at the wrong price. So it is the actual transaction that you win or lose on. So if the stock market's going down and you're not selling, you're not locking in losses. You only lock in a loss if you panic sell your investments. So don't do that. Hold strong, have conviction, and some of these other tips will make sure that the stocks that you invest in are actually going to be good ones. Number 2, never invest in get rich quick schemes. If it sounds too good to be true, it is. I'm a big proponent and a big fan of keeping it safe and investing in stock market index funds that track the index. If you are a day trader, if you're a more advanced investor and you have a proven track record and you feel comfortable with it, there's no one that can sit here and tell you what to do with your money. But if you are not, if you have a day job that is not related to stock trading, then I highly recommend going the safe route, plowing your money into index funds or even mutual funds. If you want to go a little bit more aggressive, be consistent and don't worry so much about the fluctuations that are going to happen in the account. Again, unless you're selling it, you're not locking in a loss. So those valuation changes that happen, they're going to fluctuate up and down. Just expect that. Number 3, never forget to consistently buy into and invest into the stock market. The stock market is a law of averages. It is not a game of buy low, sell high, or vice versa if you are shorting stocks. The stock market is about consistently investing and setting aside money into the market and dollar cost averaging your way into the market. That means out of every single paycheck that you make, having a set aside amount of money that is going to be invested in the stock market in safe, known investment vehicles like index funds. There's a track record of people that try to beat the stock market by buying low and selling high. I don't recommend getting in that game. Again, invest in the index funds and don't think twice about it. Pick good index funds. You can see their benchmarks, you can see their history. Pick the good ones, look at their ratings, and plow money into those, and you will make money and you will build wealth over the long term. Number 4, never wait to invest when stocks have reached a peak, meaning don't wait to invest when everyone else has already plowed the money into the market and pumped the prices up. That is the worst time. as stocks are going down and decelerating, that is the best time to get a discount and to be buying into stocks, because you're going to buy it low and then you're going to ride the wave up instead of the reverse, which I see way too often, is people get greedy. And so when they see other people pushing stocks up, they buy in and they're buying an inflated value instead of buying stocks at a deep discount like what comes in a recession. Number 5, this is my most important tip. Never invest in things you don't understand. Now, this could be said about more than just stocks. This could also be said about businesses, startups, real estate, any sort of investment vehicle that is out there. You should not be investing if you do not have a level of competence and understanding in what you're investing in. The biggest reason that I see that people lose money is actually because of this. They want to do well, they have good intentions, they mean well, they want to build wealth, but the problem is they are lacking knowledge or they are lacking experience, and they go and they YOLO into something that they don't understand. Unless you are a day trader and someone that is doing this on a regular basis, play the odds, put them in your favor, buy index funds, buy consistently every single paycheck, every month. Ignore the fluctuations that are going on in the market. Your job is to buy in to stable, consistent funds that are going to get you that 11% average annual return, because my friends, that is enough, as we alluded to at the beginning of the video, to build wealth and to retire with dignity and to live the life that you want to live. To put that into perspective, on average, every $1 that is invested at the age of 20 will turn into $88 by the time that you turn 65. That is a tremendous return on your investment, and it is a passive return on your investment if you are automatically pumping money into set up index funds. Stay away from things that you don't understand. If you do want to diversify and go into those things, just make sure that you either do the homework to understand what you're investing in, and by doing the homework, I recommend doing things like reading books on the subject instead of just going on YouTube and asking random people that may have horrible advice. Read books or get a mentor, someone that is familiar in that space, or hire a professional like a consultant, a realtor, wherever you want to go, an entrepreneur, wherever you want to go. Get someone in your corner that has been down that route, and they can help you avoid the pitfall. So knowledge is power. And when you're thinking about this, definitely you're going to want to avoid these traps. So make sure that you avoid these 5 traps at all costs, because these are the 5 buckets that will make you lose money faster than anything else that you could possibly do in your investing life. So guys, check out the links in the description to get my free financial plan. Check out the link at the end of the video to learn how to implement a budget to actually save more of your money and then be able to invest more of it so that you can build wealth faster. What is the biggest mistake that you see people make when investing? Go ahead, drop your thoughts in your comments down below. Thanks so much for all the love and support, and I look forward to seeing you on the next one.